Well, let's talk about the market technicals. Aditya Agarwala of Yes Securities now joins in for a tech check. Aditya, overall, you can't complain about the markets. It's been running on steroids for so many days now. But just in the last 1 hour, we've seen the market slip from the high point of the day. What does that tell you about the trend?
Afternoon, Rima. Thanks for having me on the show. So absolutely, markets have been on a roll. For the last 4 trading sessions, we have seen markets gain quite a bit of momentum, and today being the maximum. Having said that, 18,200, 18,220 is the hurdle area. If you take a look at, if you go back to previous month, this was a intermediate high on the market from where market started to correct again. So we're back again at that level, and 18,200, 220 will continue to act as a resistance. If I flip to a slightly lower time frame chart, maybe a hourly chart or a 30-minute chart, I clearly see momentum losing out. RSI started to form lower lows, lower highs, while price continues to make higher highs. So this clearly tells you that there's some bit of profit booking that can kick in. Our markets, given the fact that the global markets have also turned a little volatile and choppy, especially the US indices. So we are sitting on good gains. So it's no harm in booking our profits at these levels if somebody is sitting on long position, and wait out for market to take out 18,200, 220, and then it will be a good idea to go long again. Alternatively, one can look at minor profit booking. 150-point profit booking from these levels cannot be ruled out on the Nifty. Probably that can be a good idea to go long again. But at these levels, the risk to reward clearly is not in favor of going long. Same goes for Bank Nifty as well, though it has been an underperformer. But today, after the good outperformance, 39,000 on the Bank Nifty is also a hurdle. Until unless it takes out 39,000 decisively, I'm not looking at taking fresh long positions on the Bank Nifty as well. On the downside, 38,500, 38,400 is where the immediate supports lie. So maybe on a dip to those levels, one can look at initiating fresh longs on Bank Nifty as well.
Okay, not looking at taking any fresh longs. Aditya, good afternoon. What are your individual picks then?
Afternoon, Sonal. So since markets are a little choppy and I expect markets to turn a little volatile as well, I've got a buy and a sell. Apollo Hospitals is clearly looking like a sell candidate. It's on the verge of a breakdown from a bearish flag pattern. One can go ahead and execute sell positions in the future side as well for a target of 4,800 on the downside with a stop loss at 5,150 on the upside. The second stock recommendation is a buy. Indus Tower has finally managed to come out of the lull phase and break out from a consolidation. Volumes are also pretty healthy in trade today. On the upside, targets could be 300. On the downside, one can put a stop loss at 265 and go for a long position here.
Okay, all right, Aditya, thank you so much for joining us with that technical check and individual picks as well. But with that, we'll move on now and talk about some global opinion on inflation and India. Earlier today, we caught up with Arvind Sanger, who's the managing partner at Geosphere Capital Management, and he says that he thinks market will remain volatile till we know how the US Fed acts. Listen into what he had to say.
Right now, the jury is out, and part of the reason the jury is out because we're all struggling to understand how much of this inflation is caused by one-time COVID-related disruption factors, which are causing both, stay-at-home demand for goods to be high and supply chain interruptions. How much of it is being caused by that, and how much of it is being caused by a long quiescent labor and goods inflation, which is going to remain more stubborn and is going to remain a little more harder for the Fed and other central bankers to tame. If you ask me my opinion is the latter will prove to be a little bit of a bigger problem, and I think the market will remain somewhat volatile till this issue is settled as to how hard the Fed will have to slam on the brakes. I am trying to position the Indian portfolio to be a little more inflation-proof. Real estate is one area that we've liked for a while, and I think that what we're seeing there is a good sign. I think what we're seeing in oil prices, what we're seeing in other commodities, I think are signs that some of these areas will do well. So we've been positioning our portfolio not so much whether we're underweight or overweight India. We're I think fair weight, but we have been positioning it into areas where we think the inflation and potential rupee. And I will tell you, I've been somewhat more cautious about the rupee, and so far that concern has turned out to be not justified, but I still remain cautious on that front too. the RBI is still somewhat more accommodative in India. I would be cautious about those because I don't think the RBI can keep itself separate from where most of the central bankers around the world are going. And as liquidity tightens in India to deal with inflation and to deal with global cues, I think some of these sectors remain at risk. So yes, I think that there is signs of bubbles in some of these areas, and I'd be quite cautious about those.
Let's slip into a break on that note. We'll come back with more on the markets and individual stocks.